with this sell-off we're seeing in stocks. Actually, last week, really rough start to 2022, and we're seeing big tech get beaten up really the most, with the NASDAQ now formally in a correction. Are you using this as a buying opportunity? And if so, what are you loading up on right now?
I am, actually. I mean, first of all, let's talk about the volatility in tech. Tech stocks are historically volatile. They trade at high PEs. Many of them trade based on growth metrics, not necessarily earnings. And that gives them very, very high multiples. And so generally speaking, they have volatility. But the way I look at it in corrections like this is, has anything fundamentally changed in their business models? I mean, are you going to use Zoom less? There's a speculative name. Are you going to use Google less? Or is it going to continue to grow? Is Microsoft still going to be an enterprise platform? The answer is yes to all these questions. And so when you get volatility, generally speaking, in my world, I take advantage of it because I have to deploy capital all the time and I have to decide where am I going to put it. I like growth and I understand it's going to be volatile. And days like this, I remind myself, I've seen this movie before. Go back 17 years on Amazon, which I've owned for almost that entire stretch. We had 30, 40, 50% corrections each year. And yet look where you end up today. And so I look at it and say to myself, let's learn from the past, apply that to the future, take advantage of volatility. The economy is strong. The use case for technology, it gets more important to enterprise every day in every part of the globe. That's the investment thesis.
So Kevin, we know the new year brings a lot of headwinds, but there are also lots of opportunities. So what is the biggest opportunity for investors as you see it in the new year?
Well, the one that I really found interesting over the last 24 months has been crypto and blockchain technologies and tokens and NFTs. You know, you have to make a binary decision about this stuff. And this is very difficult for many institutions. I talk to them every day because I'm in the indexing business. And many of them have not even started their journey into cryptocurrencies. But the reason you should think about it is this. This is how I wrap my head around it. And I think it helps investors to think this way. If you invest in Microsoft and Google and Amazon and so many of these other platforms, what is the core you're investing in? It's basically software. Google software. Well, Bitcoin is not a coin, it's actually software. The blockchain is software. Ethereum is software. HBAR is software. Polygon is software. So the real decision is if you're willing to invest in software because it's a productivity tool as an equity, such as Google, why wouldn't you invest in software such as Ethereum? Because it provides a service, particularly in payment systems, that is being used globally. And that's sort of my investment thesis. And then the question is which coins, which tokens, which blockchains. And for that, I apply the same rules of diversification I apply to my stocks and bonds. No more than 5% in any one position, no more than 20% in the whole sector. So I'm not anywhere near 20% in crypto. I've just gone over 10.7 in our operating company, but I have a plethora of positions. And I'm going to make this decision there that this is even more volatile than technology equities. And it certainly is. Bitcoin's having one of its worst starts ever. But you have to get used to it, just like you had to get used to Amazon, where it would have these 30 to 50% corrections. Same thing with Bitcoin.
So are you using crypto sort of as a way to hedge or diversify from other assets like real estate, for instance? Are you using it sort of instead of the way we would traditionally use gold as a hedge?
That's an excellent question. And the answer is yes. And there's a direct tie into real estate. Here was my dilemma last year. I sold a lot of our commercial real estate in our portfolio, turned into cash, called my cash desk, said, what are we getting for this cash? Because I haven't got any ideas to deploy it yet. I need some time because I like to put cash back in the market slowly, take advantage of corrective days like this, etc. And they said, we can get 20 basis points. 20 basis points. And I said, wait a second, inflation's over 6%. That means I'm being taxed at 5.8% on holding cash. And that was when I started my exploration into crypto. And it took me to two platforms that I use today. FTX, for where I hold a lot of my, it's a centralized, and I have to disclose I'm a paid spokesperson and an investor in FTX and use their platform. And Circle, where I use USDC, where I stake stable coins and get somewhere between 4 and 6% interest. That was my first exposure. And let me tell you something, you know, It took me 6 months to get my own compliance department and my own external auditor to agree to sign my statements. That's how difficult this is going to be. But as and that is in fact the tremendous potential of crypto. If we make it regulated, if we get institutions into it and find a way for them to be compliant, there's trillions of dollars that are going to come into this space because it has a pragmatic use. Now I'm at least keeping pace with inflation on my Circle stake, and I've got a wide range of holdings in my FTX account. And it's completely compliant with my external auditors and my internal compliance department. It took a long time to set up. Other institutions are going through the same birthing pains.
Yeah, we'll see if 2022 brings some clearer regulation in that space, Kevin. But I'm curious if you've bought any of those non-fungible tokens, those NFTs, how much of the portfolio is dedicated to those?
No, I don't have a lot of NFTs yet, but I will tell you, I actually believe that the potential for the NFT market is actually larger than Bitcoin. And I'll tell you why. The idea, and let's take a physical asset. The one I like to use as an example is watches. I'm a huge watch collector. I have a massive collection of watches. One of the biggest challenges I have is inventory management, insurance management, and then of course, authentication. When people offer me vintage watches, I have to go through a very arduous authentication process to know if it's fake or not. There's so many fake watches in the market. NFTs could solve all of those problems. So in the case, a use case for the multi-billion-dollar watch industry, because the actual trading of secondhand watches is 10 times the size of the original watch market each year, because there's billions of dollars worth of very desirable watches that trade all around the world. If I could turn all of my watches into NFTs, and in that way I could let my insurance company know, look, these are the 10 that are out of the vault this week. Bid me on insurance just for these 10. Here's where they're located. Here's why I want them insured. And all the rest I'd self-insure because they're in a bank vault in some city somewhere. Authentication. Every time I sell that watch, the scan of its dial, which is down at the micron level attached to the NFT, would authenticate it. You could rescan it and prove that it was the original watch. So for that kind of thing, same with real estate, same with fine jewelry, same with pens, same with cars, all of this is going to move onto the chain. And so the best way to invest in it, from my point of view, is take positions like I invested in Mutable.com. They own NFT.com. They're building a curation platform for NFTs everywhere. And so that's an equity that I own. I own Wonderfy.com, which has just bought the largest exchange in Canada. They have 375,000 accounts in a jurisdiction that really is progressive in crypto. The Swiss, the Canadians, the UAE government, some of these places are now becoming a little bit more progressive, and you have to invest in those geographies if you want exposure. So there's a lot going on, but it certainly takes a fair point of a lot of time in my day just tracking all this stuff. I'd say I spend 40% of my investment day tracking cryptocurrencies now.
We actually had the CEO of Wonderfy, Ben Samaru, on recently to talk about that deal. So, all right, we understand it, we get it. You're liking the NFTs, you're liking the crypto. What else do you like? Talk to us about other sectors where you really see opportunity this year.
Well, I've always had a 5% weighting in gold. People don't talk about gold very much anymore because crypto's become the gold du jour, the digital gold, so to speak. But it's still actually, I think, an asset you want to have in a rising rate environment. And I think diversification now towards stronger balance sheets is going to be very important. I think if you think about a portfolio, you're managing an equity portfolio. For growth, you're going to have vol. There's no question. So if you're going to put 20% into technology, you're going to see price swings like we're having today. But if you want stability, go through the S&P 500 and find the balance sheets that are the strongest, that actually are growing free cash flows, distributing portions of those profits through dividends. So my theory for 2022 is this: we're not going to get another 20+% return in the equity markets. It's going to be more muted, more like 8 or 9%. Earnings growth, I think, will be around 8% on the S&P 500, plus add another 100 basis points for dividend distributions. You're going to make 8 or 9% this year. You're going to go through a lot of volatility, but that's still way better than how you're being treated in the fixed income market. Plus, think about the risk you've got. If you buy long duration bonds right now, you're going to get killed if rates continue to go up. And the yields right now on AAA or BBB and above corporate credits are not that attractive. They're still sort of 3.5%, which doesn't even beat inflation. So I think right now it's focusing on higher quality names. For example, I don't own the airlines. Take United, for example. I always use this use case. They started the pandemic with $7 billion in debt. Now they're way over 20. Why would you want to own that balance sheet? Why? There's no reason to do that. There's so many other companies that don't have that upside down balance sheet situation today. And those are the ones you have to look at. You've got to groom through the S&P and pick your positions. And then for growth, you stick with technology.
Hey, Mr. Wonderful here, and you know where I am? This is one of the biggest boat regattas in the world. It's the Head of the Charles in Cambridge, Massachusetts. Now, it's a really big weekend, and people come from all around the world to watch and be participants in it. Over 9,000 athletes here, some of them Olympians, some of them like Rob right here, who's part of this whole organization and a rower. How did it get started? Because I know it's been around forever.
But it started in 1965.
Yeah.
It was a small event, and as it's grown over the years, it's now over 2.5 days long. There are hundreds of competitors, different clubs participating, and all the competitors across the days.
All right, you can't have an event like this without huge sponsorship. There's hundreds of thousands of people attending this. That would give you some idea why sponsors would want to sponsor it, of course, but it's only a 2 to 3 day event at best. So let's ask Jim here, who's a major sponsor, why? What's the reason you do this?
So the reason we chose the Head of the Charles to sponsor this year is it really embodies, Crew in general embodies, the entrepreneurial spirit that the owners of the company really always enjoy talking about. They've started this themselves. We're 23 years old, and we're thrilled to jump into this for the first year.
You're in a very competitive market. It's clothing, right?
Absolutely.
Okay, and what is it? What's the association with rowing? Is there a fit?
So for the Association of Rowing is we're not going to be the technical brand, but we're going to be the brand that shows up to the event you feel comfortable in, you feel great in, and you're proud to be along with. We've got friends and family supporting these rowers, and rowers themselves are just thrilled to be out and about again after COVID. We've got 11,000 competitors, we've got 800 clubs, we've got roughly 400,000 people walking through here, and the excitement is absolutely palpable.
So this is a pop-up boutique, right?
This is a pop-up boutique. This was a one-day, build it all, get rolling, make sure the registers go, and we're thrilled. This was canceled last year for COVID for good reason. This year, the team here did an amazing job at making it COVID-friendly, yet also service whether the weather came at us, which thankfully it didn't. We had tents available if need be.
Tell me about your business. How much of it is it retail and how much is direct-to-consumer online after the pandemic?
So we really leaned into the direct-to-consumer online during COVID, obviously. But that being said, we kept our retail doors going the entire time. We've taken this as an opportunity to really connect with our customer and find out what they're looking for, and moving forward, how we can better serve them. Whether that's doing things spur of the moment and on demand, which we've really become experts at, or delivering some of the classics that we have. So, a vest over here or a Shep shirt on one of the mannequins behind me is something that we've been behind for 20 years. What they encourage is entrepreneurship. So everybody on our team is going to go home and say, how can we make this better for next year? How can we come up with new, fun, exciting ways to do it? And the encouragement from two brothers who own the company is just absolutely something that everybody in the tent behind me finds empowering.
So let's talk about the daily regimen. You talked about getting up and doing it before you went to work.
Yeah.
What time do you get up in the morning?
This is the thing. You got to get like 6 hours, right? So, if you're getting up at 4:30, 5 o'clock, you got to get to bed, 10 o'clock, 10:30, something like that. And the sleep will kill you. That's the one thing that you can't do without.
Yeah. So you're going to bed around 10. You're getting up at 4:30.
Yeah.
And then when are you on the water?
Usually on the water here about 5:30.
There's no light.
There is in the summer. In the summer, it's really nice. The city's really quiet. You got the whole place to yourself. In the fall, the schools are back, and the days start getting shorter. So it gets a little crazy here in September. Once you've learned how to row in the dark, you can do it because you follow the shoreline, and you can do it. You have to have bow lights and safety equipment and all that kind of stuff. But there are people that row in the dark. I'm not one of those, but there are people that just row in the dark.
And one of the things that sometimes people don't realize is just how technical a sport it is. So it certainly involves a lot of strength, but getting 8 people working together in unison to maximize the speed of the boat really involves a huge amount of technique as well as strength.
So that's why they practice. They know each other. This crew's been together, right? That's
correct.
Who's the oldest rower? I mean, there must be somebody that just
There are people in their 80s who are still competing in the head of the Charles. You chuckle. You can do it. And it's never too late to start, Kevin.
Really?
Yeah.
We're gonna get you out there.
We're gonna get.
I got to get out there, no question about it.
If you like that video, wait till you see my next one. Don't forget to click right over here and subscribe.